How does commercial lending differ from consumer lending?
Yeah, that's a really good question. I get this a lot. The way I try to break it down is consumer lending tends to be more straightforward and commercial tend to be more nuanced and detail oriented. Consumer lending target people and their needs, their expenses and usage. So mortgage, auto loan, student debt, personal loan. Think about a personal loan where you apply for a personal loan. In some cases, you don't even have to tell the bank what you're using the money. Commercial is completely different in that it's for businesses and their operational needs. And businesses and operational needs can change and vary from one business to the other. So this is where it gets more specialized and nuanced because and the purpose of the loan matters to the bank. And the reason it matters is because typically the loan sizes are a larger. If I'm going to give you $1 million plus, you're going to want to know what you're using it. Be prepared to explain that in detail. Now, I can't tell you what to spend it on technically from a regulation standpoint, but that answer is a part of the loan request. So that's the biggest difference is commercial is a little more nuanced and the purpose is for supporting business operations, whereas consumer is typically more so for your personal needs.
What we got to get out of the mentality sometimes is that we want to start a business, give me the money. And I know it's laughable from our standpoint because we know there's a thing called underwriting that's not going to look at it that way. The bank has got to protect the interest money. At the end of the day, this is not asking your buddy, let me hold 20 that quick.
Right.
Well, that can mean anything. You've got to be willing to, hey, look, I need X, for X, buy X.
And more importantly, and to add on to that, this is going to help my business by Y. I think that's a big piece of it. What is this funding going to do for your business? Is it going to help it with working capital? Essentially, working capital is short-term financing to help you keep the lights on and keep things rolling. Whether it's inventory, is it for that? To keep it focused on this question, yeah, I think, again, consumers is more straightforward and commercial is a little more nuanced. And then that leads to business consideration. What businesses should consider, what are you using the money for and why? And it's only going to help you and your business succeed. Because as we just come out of a really, really expensive capital environment, to borrow money isn't cheap. You should know as a business owner what you're using it for and why. Because I had many conversations where lending wasn't a good option. I'm that banker. No, I don't think it makes sense for you to get a loan right from the cost benefit analysis, what you're using it for and what maybe the cash that you have sitting on a sideline that you're waiting to invest, maybe you use that. And these are the real conversations that I have with clients. And obtaining a loan are beneficial to operating a successful business. That's what I
think what happened during COVID and coming out of COVID, there was a lot of free money with the PPP, ended up being free money, so to speak, where a lower cost to borrow it.
Yeah, fair.
I want to touch on that because maybe I know I'm not necessarily deep in it as you are, but what I want to remind the audience is that don't expect that now in this environment. When we start talking about the feds and the doves and the hawks, the doves being the ones that are softening lending versus the hawks that harden lending. Right now we're in the hawk phase where it's going to cost you at this point. So I know a lot of us got spoiled during that time frame of the money being there and available at a lower cost. But today you mentioned that's really not the case.
To your point, cost has come down significantly since COVID and where we are, Fed's cutting the rate. And it's kind of our outlook is clear with the election being done and to say that it's significantly lower, but cost of capital has dropped some. All costs can make sense if it makes sense. And it goes back to understanding what the purpose of the loan is. If you're gridlocked, your growth is blocked by physical square footage in a building or outreach to a market segment that you have been unable to penetrate, capital that's standing in front of you from doing that, that cost of the loan is probably going to be a minimal impact on the bottom line if you've done the math right. And this is, again, why the purpose of the loan is one of the most important things to consider when you're going to look at a loan. What is this going to do for my company?